these are carefully handpicked by URA at this 9 stipulated location. So these 9 locations is very important for you in the event you want to go for potential en bloc. Don't go into this area because developer will have to end up building lesser units, which then again decrease their economic of scale and increase their risk as well. Talking about the understanding of the Enbloc guidelines and risk. So in the Enbloc guidelines and risks over here, we talk about the guidelines. First thing first, consensus and additional developers fee. So looking from the lens of the developers as well, when we talk about Enbloc, not just from a consumer standpoint. So over here, we talk about in order to get an Enbloc approved, it must have at least more than 10 years old to have 80% consensus to the collective sale. So if your development is more than 10 years old, we just need 80% consensus. And to take reference, this 10 years old is not from the date of acquiring the land. This 10 years is actually from date of TOP or CSE, whichever that comes earlier, right? And then the next one we have is if your development is less than 10 years old, it takes a 90% collective sales vote to then, of course, going ahead with it, all right? So we then talk about additional fees that will be incurred by the developer from the 5th of July 2018. What we have is additional stamp duties on the developer by 5%, which is non-refundable. And then again, we talk about another 5% that adds up to total 10% banker's guarantee, where the developer has to pay for the sale price. And over here, if your development that you are eyeing as a developer or as a consumer, you will know that the developer will need to top up the land lease if it falls under the 9 leasehold tenure. All right. Then second thing, we talk about development charge. Right. So what is development charge? That is tax that is levied when planning permission is granted to carry out development projects that increase the value of the land. So over here, how do we get a calculation? We will use the development ceiling, the value of your proposed so-called development, less the development baseline, which is its initial so-called development size, and then less development charge exemption. And this is mainly targeted at areas that are under conservation or heritage area. There is exemption for that. And of course, development charge has actually raised by 10.9% for non-landed residential usage. And basically, we are talking about non-landed residential usage, and this is basically implemented just August 2021, which is just 2 months ago. Okay. So what's so important here, we also talk about the qualifying certificate that you learned just now that was introduced in year 2006 based on the first chart. So it is actually targeted at developers with non-Singaporean shareholders or directors. That means mainly targeted at foreigners. And there's 2 rules. One of it is to complete the construction and obtain TOP and CSE within 5 years from the date of QC or the date we acquire the sale of the land, whichever that comes earlier. And then next one, we then talk about the disposal of all the residential property within 2 years from the date of TOP or CSE, again, whichever that is earlier. All right. So in this instance, what is failing to meet this deadline? There will be penalty that developer has to pay based on the percentage of the land cost. And these are basically extended on a year-on-year level in the event if you need more time to fully sell off the entire unit. So if you are doing a 1-year extension, it will be 8%. All right. Second year will be 16%, and then third year will be 24%. And this is prorated to the percentage of unsold units. And then they will also forfeit their 10% banker's guarantee as well, failing to meet these 2 QC rules. So there's a lot of risk on the developer. And in 2019, there is also a maximum dwelling unit that was introduced in the cooling measure, so to speak. So what the URA planner did was actually, back in the good old days, rest of central region, outside central region, medium size restriction is only 70 square meter. So what I meant is that if you were to have 2 units, okay, 1 unit is, and the medium size is 70 square meter, the combination of these 2 units will add up to 140 square meters. And if you were to take 1 unit to build maybe a shoebox at 40 square meter, okay, the other unit have to compensate by building 100 square meter to make up the medium size of 70 square meter. All right, and that's how it affects for developer. So when there is an increment of such thing, it actually makes developer to build bigger units with smaller number of dwelling units for sale, and this increases their risk as well. So again, how do we calculate the number of dwelling units? We actually use the master plan gross plot ratio times site area, which is the gross floor area GFA, divided by the 70 square meter ruling, which is the medium sizes. We then get the number of dwelling unit that is permissible to be built in this so-called land. All right. So with that in mind, we then see that in the central area of Singapore, we are still abiding with this 70 square meter. There is no restriction in this region. But if you talk about the outside central region and the rest of central region, the medium size has increased to 85 square meters since 2019. And to share further on, there is also another further restriction that heightened it up to 100 square meters. And these are carefully handpicked by URA at these 9 stipulated locations. So these 9 locations is very important for you in the event you want to go for potential en bloc. Don't go into this area because developer will have to end up building lesser units, which then again decrease their economic of scale and increase their risk as well. All right. So what are these 9 locations? Okay. What we have is Loyang, Marine Parade, Telok Kurau, Eunos, Joo Chiat, Mountbatten, Pasir Panjang, Shalford, Watten Rise, Stephen Sanctuary, and 2 more, Balestier, and finally we talk about Kovan and Hausan. Okay, so this area, these 9 areas, if you could just do a screenshot here, because these 9 areas is very important for you if you buy a potential en bloc development. You do not want to once you understand this, you basically will know that developer will have higher risk trying to en bloc in this precinct. So the next thing, we then talk about past en bloc trends and key factors that influence an en bloc. So 9 leasehold plots versus freehold, which is more formidable or which is much more visible or lucrative. So in this instance, we see that the last en bloc itself, leasehold is favored over freehold properties in the en bloc fever then, okay, in 2016, 2017. And why so? Because to share, land staff developer prefers larger leasehold site that could achieve greater economic of scale, that could churn out better profits. And next, developer also prefer popular HDB estate in the suburban area because most of the properties in that precinct are also leasehold as well. Okay, and she believes that 10 to 15% has to be paid as premium if you were to go and en bloc a freehold site. And these tend to basically command a higher premium over the leasehold. So this itself acts as a hurdle for sensitive, in terms of quantum sensitive buyers that are basically, investors, etc. Especially so when they saw TDSR is still remaining in place. So again, this is why developers actually shifted their focus from a freehold-centric en bloc strategy to a 9 leasehold strategy. Okay, so over here we see a chart that says flavor of the season, and the title says leasehold versus freehold. And at the top of the table, it shows the by number of units that was acquired by way of en bloc in leasehold on the left side, followed by freehold on the right side. And then by way of value that you paid for the land, in terms of percentage again, by leasehold versus freehold. So you see a market shift in dynamic in year 2016, where the developer actually acquired a share of 92% over here, but only paid 84% of the en bloc value. Whereas for freehold, for developer that went for freehold, they acquired only 8% of the market share, but paid 16% of the en bloc value. And then again in 2017, we see that leasehold plot for 83% share, developer only paid 68% of the en bloc money being done. So with that in mind, it only makes business sense as a developer to use lesser money to acquire bigger market share. So with that in mind, leasehold property for en bloc was actually a lot more favorable if you are looking at suburban precinct. Okay? So next thing, we then talk about over here, leasehold versus freehold performance in first half 2018. So me and my team, okay, we actually racked our brain to come up with this new chart, and basically this is done by us by way of planting the numbers in individually. All right, so it's a lot of work. Okay, so at the bottom itself, you see these are the collective sales done, and of course we launched already since 2018 first half. And over here, we then drop them into 2 different comparisons. One is 9 leasehold, and the next is actually freehold. Okay, so those in blue are under double nine leasehold, and the rest in white are freehold. So again, we then see the new projected average PSF comparing to his en-bloc PSF PPR that was done. So over here itself, you see that this is the double nine leasehold, old price, new price. And freehold itself, this is the old price and the new price as well. So most importantly, what we really want to denote here is the replenishment indexes. As I shared during just now on the prelude, we talk about whenever a developer en-bloc unit, they will replenish 3 times, right? So let's see how many times comparing the old development to the new development has it been replenished, and I call this the replenish indexes. All right, so over here we see it's all over the place, 4, 3, 2, and some even 1, very little 1. All right, and of course those that it's in 1 usually falls under the so-called, I would say, the old rich area where people still prefer sizes, and instead of making it like a mass market development, they make it into a luxury development. All right, so in this instance, we look about the developer gross margin as well. Very important, because whenever you buy a land as a developer, you also want to know what is your gross margin from the land acquisition cost. Okay, so this is basically margin on top of your land acquisition, and this is the gross figure. So over here, we talk about double nine and freehold comparing side by side. We have replenishing index for double nine leasehold to go as high as 3.25. Okay, so for a developer, again, based on the previous article, it does basically confirm and assure that you can actually have a bigger economic of scale. And for the freehold part, it's only 2.67. Okay, and then for the, okay, so you can see this is basically the medium 3 times point. And then again, in terms of the developer's gross margin for a freehold site, basically is about 71%, but for a double nine leasehold, you get as high as 133%, almost double in terms of gross margin. Okay, and this is where we talk about the baseline. Baseline, we should get at least about 50% to, in order sensible and feasible for en-bloc to happen in terms of developer gross margin. So next, over here, we then talk about what's your risk. Very importantly, today you want to buy something, especially en-bloc, we want to know what are you putting yourself through. All right, because a lot of people talk about just windfall, but they do not know what are the risks, the trade-off, the cost-benefit analysis that they are basically putting themselves into. All right, so over here we'll be covering your risk. So in the event we talk about waiting for en-bloc, even if the en-bloc were to happen, there will be sales challenge in court as well, in high court. We've seen it in recent years as well. And we also have the so-called probability where the residents or community does not want to sell. There may be also a so-called argument where there's an unfair distribution of share. So for the third so-called portion, we talk about unfair distribution of share, is where some of the units in the good old days, especially the old ones, they have very big so-called patio or if not roof terraces. And when a developer were to basically en-bloc, they may not pay a 1-for-1 for the so-called open terraces space. And in this event, that created a so-called unhappiness between the seller's price and also the developer buying price. All right, so these are some of the so-called constraints that will block an en-bloc. So we then talk about a successful en-bloc if it were to happen. What is your risk here? Basically, if it's successful, within the first 3 years from date of purchase, if that happens, all right, you'll be taxed 12% seller stamp duty on the first year, followed by 8% and 3% on the fourth year. Okay, 4% on the third year, sorry. So with that, what I want to share with you here is that it's very importantly, this seller stamp duty has to be paid upfront before the sale is completed. So if you do not have that cash sitting around, I don't know how you're going to do it. You're going to pay first and then later on collect your money. And how long later, I'm going to explain in the next few clicks. So over here, we then talk about we might need to wait for 2 years for the entire sale to finalize. And then finally, sales proceeds will only disperse 6 months after the sale. And then you might also need to buy a new place directly because your primary home has already been displaced. So with that in mind, you are also entering at the market high because en-bloc is happening. That's why you got en-bloc, right? Okay. So the next thing we need to talk about the field en-bloc, what's going to happen? We then hold on to a stagnated property perpetually or be subjected to even new policies as well. And why stagnated? Because of the 15-year shelf life that we learned, right? So again, we then talk about you could also pass on a burden instead of a legacy because most of them buying on, they wanted to pass on a legacy. But I want to share that if this property is by way of financing, you will also pass on the mortgage to your next in line. And then we also talk about paying interest on aging property which is stagnated. You're incurring again interests. And then aging property will equate to increase in maintenance costs, which also means you have to pay higher sinking funds or top up every now and then. And then finally, a failed en-bloc also restrict the subsequent en-bloc attempt by the residents for the next 2 years as well.